Ladies and gentlemen, a major analyst has just initiated coverage on HIMS stock. Is HIMS going to $0 or is HIMS going to $100? Let's find out. By the way, Shamow says too, like and subscribe. So yeah, what's going on with HIMS? Let's set some context. First of all is the trends, the website trends. So the HIMS is trending right now, which is a very good thing. This means the marketing is working. So you can see the trend here. It's actually near its peak. Now it's HIMS, and then this is for hers.com. Both are trending, which is very nice. So what's going on with HIMS stock? HIMS stock is recently trading at $16.46 at a PE ratio of 205.75. That is high, but there's a reason, and this is actually a good thing, and I'll show you why. So for HIMS, their forward PE is 49. So you're wondering, how does HIMS go from $205 forward PE, $205 trailing PE to a $49 forward PE? How does that happen? How that happens is HIMS recently became profitable. Look at that. HIMS is now consistently profitable at a tune of about $11 or $12 million per quarter. And this is the reason why the PE is growing so much so fast, is because of this reason. When companies are newly profitable, the PE ratios just shrink substantially very fast on a newly profitable company. They were losing a lot of money, but now they are profitable. And I think they're the only profitable telehealth company. Correct me if I'm wrong. Let me know in the comments. And also, their revenues are growing exponentially. So that is also a very good thing. They're growing faster. This company is growing faster. So yeah, what's going on in the most recent quarter is revenue is up 52%. Adjusted EBITDA is up 270%. Remember, newly profitable company, these numbers are going to be exaggerated and huge. Operating cash flow is up 219%, free cash flow is up 377%, subscribers up 43%, and monthly average revenue per average subscriber is up 8%. Frankly, the only other company that I've seen recently with these kinds of numbers is NVIDIA, but that's another story. Okay, so when did I buy into HIMS? I bought most of my shares in around this red circle area. That's when I purchased most of my shares in HIMS. That's when I started initiating my coverage. Why? Because the next couple of days, HIMS is going to release their next earnings report for that period. And I had a feeling I wanted to get in before that report released because I thought it was going to be good news. Turns out it was. I didn't know for sure because what I did know is the previous quarter back here, before the spike, that's when they first turned profitable. They first turned profitable and the stock spiked up. And then it declined. It declined in this period down here. The stock is on a decline and they're about to post even greater profits than in the last quarter because they were barely profitable that quarter in that initial spike. I thought they were going to be much more profitable now. Turns out I was right. I loaded the boat and the rest is history. To get into the actual purchases, I'll tell you what, I'm going to open up my Patreon portfolio for you here. So this is my Patreon portfolio. So you can see on May 3rd, I purchased $1,000 in stock. And then, this is my smaller portfolio. My big dog portfolio is somewhere else. On May 6th, I loaded the boat again with $5,000 in stock. May 7th, a combined, about another $5,000. And then I started purchasing more on August 5th. You'll notice that after May, the stock spiked up. So I kind of went, okay, whatever. But then after it spiked up, it went down again. So the stock decreased substantially since its high of $25. So you'll notice none of these prices that I bought at are anywhere near the $25 high. So I started buying again in August. So August 5th, I bought another $3,000. And then August 9th, $500. August 12th, $1,000. You'll notice the average cost basis. And they range from $11 to about $17 is the range in which I bought these shares. And you'll notice that on the first purchase as well, which was $11.22. So yeah, I thought I bought in at good prices. You'll notice I'm up 25.7% on these shares for a total valuation currently of $19,422.91. So what's going on? On HIMS's most recently quarterly results, they actually had this slide. This is one of their slideshow pieces. And this is where this is one piece that they're investing is in their pharmacy. So they currently have 355 combined square feet, or 355,000 combined square feet in their pharmacy infrastructure. Now what they're doing is they're building up new infrastructure. You'll see on the right here. And what they're doing is they're building this new infrastructure to support GLP-1 products better. So they're buying up sterile compounding capabilities. They're enhancing the durability of the GLP-1 supply chain, which again they did recently. Remember, I also bought a little bit before the GLP-1 announcements. So I bought pre-announcements. I got lucky. That was luck. I had no foreknowledge whatsoever. And also they're investing in an opportunity for further verticalization, which is good. I like verticalization. And currently 90% plus goes through this facility. And they're also noted enhanced capabilities. Investments in new automation and machinery at our facilities will unlock the ability to bring a wider selection of form factors as well as new multi-condition offerings to tens of millions of individuals. So they're going to be expanding the product base beyond what it currently is. Remember, HIMS is for stigmatized medicine. They do things like sexual dysfunction, weight loss, hair growth, among other things. But it's mostly towards stigmatized medicine, and they have a male section and a female section. The female section is newer, but it's growing fast. So they're spending money to grow is what they're doing, which is good for a company in their position. So yeah, let's get into the article. Enough foreplay, right? Pun totally intended. So yeah, Hims & Hers Health sees a major growth opportunity in booming weight loss market, says Analyst. So Needham analyst Ryan McDonald initiated coverage on Hims & Hers Health Incorporated at a buy rating with a price target of $24. That is nearly 50% higher than today's price. 50%. The analyst writes that, despite increased stock volatility with its entry into the compounded GLP-1 market, he anticipates a positive impact on HIMS's fundamentals and sees strong growth potential. And the stock has been volatile to say the least. With the weight loss market valued at around $373 billion, HIMS is well positioned to capitalize on this opportunity, addressing key barriers of cost and access to treatment, adds the analyst. McDonald says that HIMS is not solely dependent on GLP-1. The company is already growing at over 40%, with revenues exceeding $1 billion. And it has multiple growth drivers and margin expansion opportunities through higher equity? Is that equity? Equity care and personalized margin accretive products. Acuity. Okay, anyway, the analyst expects EBITDA of $147 million in FY24 and $233 million in FY25. $233 million of EBITDA on a company with a market cap of $3.5 billion. That is enormous on a company this small. That's like 9% of their market cap being in adjusted EBITDA. That is enormous. This month, the company reported quarterly earnings of 6 cents per share, which beat the analyst consensus estimate of 3 cents. Sales of $315 million beat analyst estimates by 5.24%. Hims & Hers expects third quarter revenue in the range of $375 million to $380 million and full year revenue of $1.37 to $1.4 billion. You'll also notice that, look at this also. The sales in the last quarter was $315 million. HIMS is expecting sales in the next quarter over quarter, to increase to to $375 to $380 million. That's like a 20% jump quarter over quarter. That is enormous for a profitable company too. For a newly profitable company, that is still enormous growth. Enormous. So yeah, what's the average price target of HIMS? The average price target of the analysts is $22.21. My price target is over $42, which you can view at my Patreon. You can get my full DCF valuation there. Now the thing about HIMS is you have to also look at the difference between what the price target is from the analysts and its current Wall Street price target, because they usually differ by quite a bit. You'll notice here that it was the stock price is quite a bit higher than the analyst price, but you'll notice now it's quite a bit lower than the analyst price. In fact, HIMS is actually 40% undervalued compared to where the analysts think the stock price is worth. So the analysts think HIMS has 40% upside. I think HIMS has 200% upside, but maybe I'm crazy. So yeah, what's the actual thing about HIMS is that that analyst does not count for GLP-1. Their estimates, their $24 estimate doesn't even include GLP-1, and also neither does mine. Why? The reason it doesn't is because I'm being what I think is conservative, because there's a possibility that HIMS won't be able to sell GLP-1 products after the shortages end. Andrew Dudum, HIMS' CEO, thinks they can, but I'm not 100% confident. I don't know. So yeah, HIMS and hers and the FTC launched an inquiry into, I think, this issue. They didn't state what the problem was or what the inquiry is about, but the assumption is it's about the GLP-1 medications. But what we do know is the FDA says, can semaglutide be compounded? When a drug is in shortage, compounders may be able to prepare a compounded version of that drug if they meet certain requirements in the Federal Food, Drug, and Cosmetic Act. As of May 2023, Ozempic and Wegovy are both listed on the FDA's drug shortages list. So currently it's allowed. Whether it's going to be allowed in the future, we don't know. Whether it's going to be allowed when the shortages end, I'm not 100% sure. So that's why in my DCF valuation model, I don't include that. But even without that, it doesn't really matter that much because it only contributed 6% to the last quarter's growth. They would have grown 46% without GLP-1, but with GLP-1, HIMS grew 52%. So either way, HIMS is a growth beast. And even without it, I think HIMS is undervalued by 200%. I think they have 200% growth potential from here. And this analyst thinks HIMS has 50% growth from here. And the average analyst thinks HIMS has 40% growth from today's price. I mean, that is enormous. So yeah, where can you view this DCF valuation is on my Patreon. And it goes for as little as $5. You can view my portfolio, my Patreon portfolio, the whole thing, my DCF valuations, and my corporate analysis. Don't forget to like and subscribe. Thank you for watching, and I'll see you in the next one.